Okay, and thank you once again for joining us tonight for our monthly US market outlook webinar. And today we have Rong, investor specialist from Phillip Investor Center, as well as myself, Ming from the Global Markets Desk that will be presenting you today for the US market outlook. And before we start, just now I was mentioning about the new Telegram chat that we have set up. So do take some time to scan the QR code now and join our Telegram chat where we can share more investment ideas and news, etc. on the Telegram group chat. Okay, you can also see in the chat there's a link there that you can click on. So you can just click on the link to join on our Telegram group chat. Okay, so before we start and before I hand it over to Rong, just want to make sure that everyone will be using the Q&A function to actually post your questions. You can post it along the way. Do not have to wait till the end to post the questions. But usually we will not have enough time to answer all the questions, but we will try our best. So just along the way, if you have questions, do post it to us and we will try to answer at the end of the session. Okay, so right now I will welcome Rong to actually start on the US market outlook. Rong, please.
Okay, hello everyone. So thank you, Ming Jin. And of course, thank you everyone for joining us here today. So without further ado, I'll be starting the presentation now. Okay, so this is the agenda for today. So basically, I'll be bringing you through some key macroeconomic events in the market and also include some of my own personal views moving forward. Okay, before we start, I think it's important for us to have a brief overview of how the US market has been performing thus far. Okay, so on a year-to-date basis, Nasdaq delivered the highest return. Okay, but if you were to look at a 1 month basis, actually S&P actually seems to be on par. Okay, in terms of performance. And over the past 2 weeks, right, I was looking at the net flow for some of the ETFs. Okay, if you were to look at the net flow for some of the ETF that actually tracks the Nasdaq 100 index, you can see that there's actually an overall net outflow, okay, of around $1.5 billion. Okay, and if you look at the net flow for SPY, which is the Spider, Spider S&P 500 ETF, over the past 2 weeks, there is an overall, overall net inflow of around $3.9 billion. Okay, so even though now it's still too early to conclude anything, but if this trend continues, okay, we could potentially be seeing some funds rotation, okay, from Nasdaq to the S&P 500. Okay, so do monitor this space moving forward. Okay, in terms of sector performance, okay, of course, year to date, IT sectors proved to be the most resilient. Okay, this is definite because we are looking at a work from home regime. We are looking at online streaming, online shopping. So all these have actually become the new normal. Okay, and however, looking at the past 1 month, okay, if you look at the past 1 month, we actually see stronger performance in terms of more cyclical sectors. Okay, such as materials and consumer discretionary. Of course, the consumer discretionary, partly, is because of Amazon. Okay, but of course, we are also seeing defensive sectors such as, healthcare, consumer staples, and utility also perform well. Okay, but on the other side of things, right, if you were to look at the COVID play sectors, which is namely the IT and also the communication services sectors, okay, we do see positive, but actually relatively weaker performance. So actually, this could suggest that there could be some profit taking place. Okay, and this is especially so after the huge run up that we see since March. Okay, so one of the key concerns that all of us have now is whether cases resurgence in the US has actually hindered reopening progress. So for that, let us first look at the overall severity of the situation in US. So we do see a new daily cases rising in 48 out of 52 states. So that's more or less almost the whole country. And of course, if you were to look at the transmission rate, okay, transmission rate is actually the average number of people who become infected by a COVID patient. Okay, so for example, if you have a transmission rate that is equals to 1, okay, it means that a COVID patient, they has the tendency to spread the virus to another one person. So of course, if we see that the figure is above 1, it could potentially mean that, the virus has a tendency to spread quickly. Okay, so when we look at the severity of this, right, usually what we do, we compare with the absolute number of cases. Because if you have a high number of cases and you have a high transmission rate, right, you definitely have a higher chance of it spreading out of control. Okay, so based on this transmission rate, we are seeing that there's actually 42 states which has a transmission rate which is more than 1. Okay, of course, looking at those high-risk states, okay, this is actually a list of high-risk states. We clock a huge number of new cases per day. So of course, we can still see a huge number of cases occurring in Florida, okay, in California, in Texas. Okay, but the good thing is that if you were to look at a percentage change, okay, previously it was at the high triple digit. Okay, but currently it is still increasing, but we can see that the inflection has not been as fast as before. Okay, currently it's between 10 to 15%. Okay, for Florida and California. Okay, so why is this important? Is because for the upcoming US election, okay, Florida is actually an important swing state. Okay, and Texas, they has a tendency to vote for the Republican. Okay, if you were to look at its past history of voting. Okay, so this is actually, to me, it seems that there is a rush against time, okay, on whether the virus can be kept under control so that, economic reopening can actually continue to progress in these states, okay, before the US election, because it could determine, where the votes could swing. Okay, so of course, risk to reopening efforts remain. Okay, despite we are seeing lower mortality rate, okay, but virus resurgence it has led to some intermittent control measures in targeted area. So for example, most recent, we see that reopening in states such as Louisiana and North Carolina, okay, they have been delayed. Okay, and also in California, Texas, Florida, they have started to close some businesses, okay, such as bars and night spot. Okay, particularly New York, okay, they have also delayed the reopening of malls, gyms, and some movie theaters. Okay, so definitely with this COVID situation, it has started to delay some of the economic reopening plans. Okay, and based on the market performance, okay, with the strong rebound we've seen since March, okay, actually the market has been pricing in a strong economic recovery. Okay, so if the outbreak continues to drag on, I believe that it will start to actually shake investors' optimism, okay, for a swift economic recovery. Okay, in terms of some macroeconomic indicators, okay, for consumer sentiments, okay, why we look at this is because consumer they take up 2/3, okay, of a US economic GDP. Okay, so consumer sentiments, they attempted a rebound in May and June with all the reopening in place. Okay, however, if you were to see the preliminary figure in July, okay, it actually suggests that, the fresh surge in case could actually pose a big setback. Okay, as we are actually starting to see a reversal in terms of consumer sentiments. Okay, of course, some may argue that this could be partly because, some of the early fiscal benefits, such as the additional unemployment benefits are actually set to expire. Okay, but, I believe that with the upcoming fiscal stimulus, okay, it could provide a near-term support, okay, for consumer sentiments. But if you were to look at, fiscal stimulus, it is actually more like an adrenaline shot for the economy. So it cannot continue over a long period of time. So in the longer term, okay, all in all, the virus definitely has to be brought under control, okay, before a sustained recovery can take place. Okay, but as of now, if we were to look at the consumer sentiments, okay, we may be starting to see a backtrack. Okay, in terms of unemployment, okay, last month we actually see that, the market is being surprised by a low unemployment rate of 11.1%. Okay, this is mainly due to, with reopening in place, okay, we see sectors such as leisure, okay, and hospitality posing biggest gains in job. Okay, but however, we have to take note that, since then, okay, around 22 states have either reversed or paused their reopening plans. Okay, this may actually cause a renewed loss of jobs in leisure places. So from this chart, you can see that, latest initial jobless claim actually increased from a previous week, okay, after 15 weeks of decline. Okay, continuing claims continue to fall. Okay, so what we can infer from this, right, is that continuing claim figures, falling, it suggests that some rehiring is actually occurring. Okay, this is mainly due to the economic reopening. But on the other hand, with the initial claims data, okay, that is actually increasing, it suggests that, there are still workers being laid off. So overall, these workers being laid off could potentially offset those being rehired. So in this case, there are definitely signs that, the labor market recovery may be stalling. Okay, and we actually need economic reopening to take place smoothly moving forward. Okay, in terms of mobility trend, so generally we see mobility has shifted towards normalcy. So of course, people are traveling more by car. Okay, and transit remains weak. Okay, as people may still be fearful of some virus spread. Okay, on public transportation, but generally we see that things are starting to go back to normal in terms of mobility. Okay, however, if we were to look at those higher risk states, okay, just now I identify, some higher risk states such as Florida, Texas, and California. Okay, mobility has actually started to taper off, okay, towards mid-June. So if you look at the timeline, okay, mid-June is roughly in line with the resurgence in cases in these areas. So if you were to compare to the overall mobility trend of the country, actually the mobility in these high-risk states appear weaker. So there are definitely signs that, people in these states are remaining more conscious about going outdoors. Okay, of course, I also look at, in terms of a reopening of restaurants. Currently, US is hovering at around 60%, kind of lagging behind its counterparts. Okay, if you were to see UK, Canada, they have actually close to around 70% restaurants reopen. Germany itself has already close to 100%, 100% restaurant reopen. So in a way, US definitely still has some room to cover in terms of all these restaurants. Okay, if you were to look at the year-on-year percentage change in seated diners, so these are the people that are actually, they are making bookings, they are going down to the restaurants, okay, they are having their meals there. Okay, before that, things seems to have been set on a path of recovery, okay, until there are signs that it's beginning to stall towards late June and then into early July. Okay, so this is definitely, attributed to the resurgence in cases, okay, which may cause some people to avoid eating out. So if this figure continue to taper downwards, okay, the major problem is that it may potentially point to a further job loss, okay, in terms of the restaurant industry. Okay, so we'll be looking out for more signs on this, especially in terms of the employment report coming out soon next week. Okay, of course, vaccine progress, which provides some optimism for the market. So in terms of vaccine progress, okay, we do have a few candidates in phase 3. Okay, of course, the most recent one that everyone know about will be Moderna. Okay, which just launched their phase 3 trials just on Monday. Okay, and based on historical data, actually most vaccines will start to fail at phase 2. Okay, phase 2 actually have close to 70% chance of failure. So if you can actually make it past phase 2, okay, you can go to phase 3. Okay, that it means that your product has a certain degree of success. Okay, but however, I mean, phase 3, there is still definitely a probability of failure. Okay, so it does not necessarily mean that going into phase 3 will mean that your product will be successful. So I think investors should definitely keep in mind on this. Okay, so this is the progress stage for vaccine. We have a few front runners. Okay, we seem to be getting closer to a vaccine. But projected timeline, okay, expected to have a mass production by early 2021. Okay, so there are definitely room for more than one vaccine candidates, okay, considering the huge number of cases around the world. Okay, so being the front runner, okay, it may give a company a first mover advantage. Okay, but you know, when we look at vaccines, they are going to vary in terms of cost, okay, in terms of effectiveness, in terms of duration. So even though you may come out with a vaccine first, but if another company is able to produce something cheaper and more effective, then definitely people are going to go for that one. Okay, so do expect a volatility for those vaccines companies to continue. So positive development for one vaccine company may actually be bad news, okay, for the others. But there are definitely room for more than one vaccine for the world. Some risks, okay, even though it hasn't surfaced yet, but it's good to keep in mind, okay. To achieve herd immunity, okay, we need approximately 60 to 70% of people to be immune. Okay, but because of the severity of this COVID situation, okay, the FDA, they came out and say that, okay, I will going to approve as long as a vaccine can show that it works in at least 50%. Okay, so even if they approve a vaccine, okay, there is a huge question mark on whether, you know, we can actually bet on using herd immunity to control the virus. And of course, in terms of vaccine, there is a chance that they are not able to provide a long-term immunity. Okay. Okay, so of course, we are seeing some upcoming government stimulus. When I prepared this table, there was still a very little information. But past few days, we are actually starting to see more information. So the latest upcoming stimulus may include some new $1,200 of a stimulus payment. Okay, there are also some changes to unemployment benefits. Overall, it's a general drop, okay, compared to the previous round of unemployment benefits. Okay, but I believe that it is definitely necessary to reduce the unemployment benefits in order to prevent moral hazards. Okay, we are also seeing more funds towards developing vaccines, towards testing. Okay, then other than fiscal stimulus, okay, on the Fed side, okay, the Fed is expected to, you know, reinforce its stance of doing whatever it takes, okay, to help the economy and to help the labor market. So we are also seeing some move from them to extend their lending programs, okay, until the end of the year. And also under their belt, they do still have some other options, okay, which they can utilize, okay, such as, you know, yield curve control, okay, more asset purchases, etc. So definitely government is there to provide some form of support, okay, for the economy and for the market. But key risk that we see, of course, recently is a U.S.-China tension. Okay, near-term focus, okay, both countries may be focused on economic recovery from the COVID-19 impact, but decoupling will definitely, you know, play out over the next few years. Okay, we have to take note that trade war is not over. Okay, US tariff and China's all these retaliatory measures are still in place. Okay, which will actually be damaging for firms on both sides. And recently, this is a summary of some main areas of tension. We can see that before we even resolve one issue, you know, the another issue starts to pile up. Okay, so I believe that near term, you know, both sides are still more focused on tackling the economic impact. Okay, but as the economy continues to recover, okay, I believe that we may start to see both sides, you know, they may have more rooms for attention. They may have the capacity to undertake, you know, more aggressive moves moving forward, especially with the upcoming election at the end of the year. Okay, sector rotation. Okay, based on a historical business cycle, okay, this is a business cycle. We can see that recovery usually takes place over many years. Okay, so if we were to look at the market now, right, being less with the S&P 500, you know, being just less than 5% from its previous high, now we can see that the market has actually been pricing very far ahead. Okay, pricing very far ahead in terms of the economic recovery process, and there are definitely expectations, you know, for the swift recovery for the economy. Okay, in terms of where we are now, most countries are still in a recessionary phase. Okay, China being slightly ahead of the curve. Okay, compared to the other major economies. But all in all, most countries are still in the recessionary phase. So this is just a very simple, a general guide. Okay, it's definitely not a guaranteed kind of thing, but it's just a general guide because at different stage of the business cycle, there will be different sectors which tends to outperform and also sectors which tends to underperform. Okay, so this table is just a general guide, and there are definitely instances whereby it actually deviates from this table. Okay, like for example, during this COVID, right, we see sectors such as IT, okay, such as communication service, they has outperformed, okay, because in a way, these sectors are able to directly benefit from the crisis itself. Okay, but in general, from what we see from the performance of the different sectors, which I will be showing you later, okay, the market has actually been pricing in a very smooth transition into the early phase of the business cycle. Okay. Okay, why do I say so? It's because for the past 3 months, okay, we actually see that defensive sectors underperform. Okay, so we are looking at utilities, we are looking at healthcare, and also we are looking at consumer staples. Okay, it has actually underperformed the general market. Then of course, COVID pay continues to outperform, okay, because they are the direct beneficiary from this crisis itself. Okay, but one thing to take note is that cyclical sectors have actually outperformed the index also. Okay, if we were to look at some of the cyclical sectors, I mean, other than financial sectors, okay, which currently still underperform the general market. Okay, so this is in terms of a past 3 months. Okay, but the key thing is that in terms of if you were to look at the performance for the past 2 weeks, okay, for the past 2 weeks, actually, we are seeing that, defensive sectors are starting to outperform the market index. Okay, so when I say defensive sectors, it's mainly these three: healthcare, consumer staples, and utilities. Okay, and then in terms of a COVID play, right, for the past 2 weeks, okay, it has actually underperformed the general market. Okay, so what we can probably infer from this is that over the past 2 weeks there could be some profit taking, okay, from these COVID play sectors, considering the huge run up since March, and they may be actually be rotating into more defensive sectors. So they are being more conscious now. They are rotating into more defensive sectors such as healthcare, utilities, and consumer staples. Okay, and in terms of average monthly S&P 500 index return, okay, currently we are in July. Traditionally, July tends to post quite strong performance. Okay, but looking into August, looking into September, okay, we are actually venturing into a weaker period, okay, in terms of index performance. So traditionally, August and September tends to be weaker before the market, starts to garner strength again, okay, and try to pick up some performance towards the end of the year. So definitely, if you believe in using historical performance as a guide, okay, this could be a time to remain more conscious. So of course, in terms of valuation, currently we are thriving on a low interest rate, we are thriving on a monetary stimulus. So all in all these have created some form of a valuation expansion. Okay, so if we were to look at the PE, the forward PE of the different sectors, it is actually all higher than its a 5-year and a 10-year average PE. Okay, so definitely for this, earnings season, stocks will definitely be under pressure to deliver, okay, in order to justify this expensive valuation. Okay, so if you were to see, some counters, if they were to disappoint in terms of their earnings, okay, there would be strong, huge movement to the downside. Okay, in terms of a general market as a whole, the cap valuation, okay, is actually trading at the upper range of the band. Okay, and of course, with a low interest rate and cheap money in the economy, there is definitely a possibility that market can get more expensive. okay, especially with the strong support from the government and also from the Fed itself. Okay, but the key thing here is whether firms can recover fast enough. Okay, whether their earnings can recover fast enough such that they are able to match the valuation, okay, that the market has actually given to them. Okay, so some investment teams, okay, I'm still a believer of 5G moving forward. I believe 5G will set the next stage of growth, okay, after this COVID period. Okay, so because this COVID period, it actually provided an opportunity for 5G applications to be tested across various industries. Okay, so we are seeing cloud learning platform, we are seeing remote medical consultation being utilized. Okay, and with all the working from home and holding all these kind of virtual meetings, okay, 5G will definitely be highly sought after. Okay, because mainly of its speed and also because of its bandwidth. And with all the social restriction measures in place for the foreseeable future, okay, we may actually see more and more countries adopting the 5G technology, okay, in order to minimize human contact. Okay, but for the longer term, we do see that there is still a huge potential. Okay, if you were to look at the internet users, the social media users, okay, there is definitely still room for a higher penetration rate. Okay, so if more people were to use all these kind of devices, definitely demand for 5G will be there moving forward. Okay, another theme that we see, okay, will be in terms of gaming and esports. Okay, so we believe that this will be the entertainment for the new normal. Okay, because there could be a potential longer term change in consumer habits towards video games. Okay, as their entertainment and social platform, especially with all this social distancing in place. So it's actually a very huge industry, 159 billion, with actually a forward-looking CAGR of 7.7%. So this COVID situation actually provided opportunity, okay, to actually, they are the direct beneficiary from this COVID situation itself. Okay, so some ETF which we identify, which you all may be interested in. Okay, of course, all these will be in mainly focused on the 5G and also on the esports area. So these are some ETF which you may want to take a look at. Okay, so with that, I will be ending my part now. I'll be handing the time over to Ming, who will be actually bringing you through some technical analysis.
Okay, thank you, Rong, for the sharing. So before I continue, so if you have any questions for Rong, do feel free to type using the Q&A function. And right now, I'll be sharing with you some features and promotions that Phillip have for our clients before I proceed on to the technical analysis. So do stay with us. Okay. Okay, so if you have not, or if you are not aware, we have for new Cash Plus account, there is five free trades for people that open a new Cash Plus account. Of course, there will be terms and conditions applied. So please do visit our website to actually look out for more information. Okay, for those of you who are interested in our US or rather technical analysis, you can sign up for this weekly US market outlook by our research analyst. Okay, we will share with you his views on on the technical side. Okay, so it can be found on our website with the events and seminars page under education tab. So and there are also many other webinars that you can look into in that area. Okay. I see some of you are using the chat function. If you have questions, do post into the Q&A. Okay. And for those of you who are not aware, there is actually a market order type that you can place for US. And right now, previously it was you can only place 80 minutes before the market open. Now you can place it throughout the day. Okay. So if you want more information, you can go to the link there. Okay. And the last but not least, before I go on to the TA technical analysis. Okay, do join our Telegram group chat today. I have posted it on the chat. I have posted it on the chat. I will post it again now. Just give me 1 second. Okay. So do join our Telegram group chat. We will share with you ideas, share with you news that we think that is interesting. If you have any things that you are interested to find out more, or you have also good ideas that you can share, it is a community that we are trying to build over here. Okay, so just if you are available, do join our group chat. Okay, if you have trouble scanning the QR code because you're using a phone, just click on the link provided in the chat room. Okay. Okay, so next one I'll be doing on technical analysis. And before we end off today, I know most of you is going to leave after I complete my technical analysis. Okay, so do help us fill up this feedback form. Okay, it can be found on the chat window, which I will send shortly. But so what is in for you if you fill up? So, okay, this time around we will have we will be sending you the slides for today. Okay, we will be sending you the slides for today if you fill up the post webinar feedback form. Okay, one moment. Let me just. Okay, so I have posted the link on the chat room as well. So you can click on it and fill up the post webinar survey form. Of course, you can fill it up after I've completed my technical analysis. Okay, and but just to note, you have to put in your email address and inside there so that we can send you a copy of today's webinar, the slides for today's webinar. Okay. So right now I will go on to the TA technical analysis proper. Okay, I will be sharing with you on one moment. Okay, give me a moment. Let me just pull out the charts. Okay, so today I will be sharing with you on just 3 counters, or rather not just counters. There are ETFs and also many ETFs. So I will go through with you NASDAQ, S&P 500, and also gold. Okay, so there is a lot of hype. Gold have hit new all-time high recently. Okay, so just give me a moment while I load up the chart. Okay, I will do the S&P 500 first. Right now, you should be seeing it shortly. Okay, right now I'm sharing with you on the chart on S&P 500 ETF. Okay, so when I do TA, usually, or rather, usually people will always do from a longer time frame perspective. Okay, before we zoom it in to the current state. So I'm currently loading the 10 years chart. Okay, you can see that generally for US over the past 10 years, we have not really see a huge crash until March this time. Okay, as what Rong has mentioned during his outlook part. Okay, so for this optimism and bull market to continue, there must be some factors in the market to push it up. But in tier perspective, what we can see here is that this will be the next resistance level that we are looking at. Okay, so nothing much here that I can show you, but probably just some patterns that you can see here. I'll zoom in now. Okay, before I start drawing. Okay, what I have on my chart is just the exponential moving averages. Okay, just basically what it does is smoothen out the prices based on the periods that that is inside. So usually people will do 20-day moving average, 50 days, and 200 days moving average. Okay, you can try it out. It's available on our platform under the technical indicator side, EMA here. Okay, so right now, what we can see here, it's this 339 level is going to be a very strong resistance point. Okay, we can see some slowing down right now. Okay, so but there is still a possibility that will hit and it may come down. But there are also chance of if the sustained economic recovery can take place and there are more factors or more funds being pumped into the market. So there is chance that the bull run or rather the current trend can continue. Okay, so in terms of pullback, if there's any, right now I don't see it happening. You can use the 50-day moving average to actually look out for this moving average as your line of support, because they are usually quite stable unless you are looking at very big shocks in the market. Okay, so let me see if I can show it to you. Okay, so right now it's 20, 50, and 200. So I like to change this to 200. Okay, I mean there is no wrong or right for this moving average. People have different take on this moving average. Okay, so if you zoom in, right now you can see when the EMA crosses down, it's actually signaling a downtrend, and now it has crossed up. Both the 50 and 20 has crossed above the 200-day moving average, and this can continue on for the long-term uptrend. Okay, and you can see here 50-day moving averages is actually acting as a good support throughout, starting from here. Okay, there was a false break, and then look at this, is support here and support over here. Okay, but majority of the time people will be looking at the 20-day moving average for the main support. The most recent support that investors will look at is the 20-day moving average. Then we look at 50-day. Okay, the long-term trend right now, what we can see is still up. Okay, in terms of technical perspective, so that's why there is still a good possibility of it going to the all-time high. Okay, that is for S&P 500. Okay, the next one that I'll be sharing with you probably will be NASDAQ. Let me see. Okay, this ETF called QQQ. Okay, if you are in the tech, I mean, if you want to trade the tech, but you do not want to be exposed to one single counter, you can consider these. These two are very large ETFs. SPY is for S&P 500. Okay, QQQ will be for the NASDAQ 100 ETF. Okay, you can see here, mainly it's the same. There is still EMA. Okay, and I did not mention anything about RSI. But anyway, right now, RSI is proving inconclusive at the moment. So what we are looking out for RSI is when it's above 70%, it is overbought, and it's below 30%, it is oversold. Okay, so clearly we can see that NASDAQ has performed way better than what the other markets have been doing. Okay, so yes, one moment. Okay, yeah. I was saying, okay, so I have also included the Fibonacci retracement over here. So Fibonacci retracement is actually used for finding retracement support levels or resistance level, potential resistance and support levels. Okay, and it's usually drawn between 2 points, the high and a low. So we can see from the March high, from the Feb high to the March low, and then we will see whether what is the target that we are looking out for. Okay, there's actually a 161.8% level that investors can actually aim for. Like I mentioned just now, moving average is still pointing upwards, it's still an uptrend. Okay, clearly. And you can see that the 20-day moving average across the entire recent 2-3 months has been acting very strongly. Look at this, 1, 2, 3, 4. Okay, right now you see you are still hugging on that 20-day moving average. So in terms of potential entry, you can actually look at 20 days moving average as a form of entry for a near term. But like I say, NASDAQ has been performing well. And if the lockdown does happen once again, it is actually still going to be beneficial for the tech companies, because people will still need to purchase their stuff online, etc., etc. And most of the things are being put online. Okay, so 161.8% level will indicate about 282 right here, $282 dollars target. Okay, so that's for target price of this. Okay, RSI is still is slowing down, so it's coming to the middle, so it's proving inconclusive. We don't use it there. So RSI stands for relative strength index. We see the strength of the movement. Okay. Okay, the last one that I will share will be gold. Okay, also an ETF right now. GLD. Okay. So if you are not aware, gold has actually broken the all-time high just I think this week, early this week. Okay, so you can see there is a gap up movement here. So let's take a look. This one we can see the longer trend. I will do a weekly 10-year chart to take a look at this. Okay, so look at this. So the spot and the futures price for gold has actually crossed the all-time high, but the ETF has not crossed yet. Okay, but we can see 185.85 in 2011 period. We are very close to it. Okay, so definitely this will actually be some form of resistance. Okay, we are approaching it. In fact, gold also is hovering around that region. It is not moving up much more strongly. Okay, over the past 1 to 2 days. Okay, but a lot of economists on the news actually they are showing or they are saying their target price is 2,000, 3,000, 3,005, etc., etc. Okay, I mean they are sustaining with the fact that the U.S. government, the Fed is actually printing a lot of money, or rather, a lot of governments are actually printing a lot of money to sustain their economy. Okay, so this is actually beneficial for gold and silver, precious metals like commodities. So that's why we are seeing this kind of movement. If you say whether now is a good time to buy, on technical perspective, there is an immediate resistance coming along, but I would, on fundamental wise, this is actually, I mean, it is a good diversification from your portfolio to hold some gold in your portfolio, can diversify your risk. So in the long term wise, because of the amount of money that is available in the markets, I would also believe that there may be some more room for gold to go. Okay, but I also think that there is also a very good possibility that there may be a huge retracement back to the moving average. So when you keep hearing me saying the moving average, it's because I think the moving average really acts as a very good base support line. Okay, you can see this 20 and 50-day moving average on gold itself. Okay, so the trend has started more than, let me see, now it's almost 2 years ago. Okay, so July 2018 and then September 2018. Now we are 2020 coming to August. So you can see this trend 2 years has been up, and there is still no sign of it breaking below any of the moving average. So on technical perspective, this uptrend looks like it's going to continue. Okay, and it's very likely that it will continue. Okay, so that is for gold itself. Okay, I will probably take another 1 or 2 more counters from the Q&A section. Okay, so I will just take a look at the Q&A in a very short moment. But right now I will go back to the slides first. Okay, so like I was saying just now, this is the feedback form that you can help us to fill in. Okay, we will be sending you the slides for today. Okay, let me see. Okay, so do help us to fill up this feedback form and to find out how we can improve for our future webinar. And for those of you that are new here, okay, do note that we have this is actually a monthly webinar that has been ongoing since last year. So if you are keen, you can drop us an email that you want to be continually sign up for this webinar, or you should be able to find more information when you log in as well. Okay, so so do take some time for this feedback form, and we will start to have the Q&A session by Rong first, while I look at some of the Q&A counters that I'd like to do the TA on. Okay, Junrong, is it possible for you to answer the Q&A?
Yeah, sure. So actually, I have been seeing some Q&A. There is one who is asking about, I think mainly asking about US banks. Okay, so yes, I do understand that, banks are looking very attractive now. Okay, considering that, the rest of the cyclical sectors have actually, past 3 months have actually outperformed the index. So financial is actually lagging behind. And the outlook for financial, okay, I believe that it is going to be looking to be more positive. Okay, previously we are seeing, concerns on the bank's balance sheet, okay, because of their exposure to the leverage, okay, in terms of the loan market. Okay, but if with all this, Fed's their support for all the financial condition, okay, I mean, you can take a look at, there is this index that is called the financial stress index. So in a way, it measures the degree of financial stress in the market. Okay, so previously it actually shot up dramatically, but if you were to look at it now, it has actually recovered to its low level, which it signals that financial conditions have started to improve. Okay, so banks definitely, as the economy start to continue to reopen, okay, hopefully that the rollback doesn't continue to take place. Okay, as long as the economy starts to progress forward, definitely I believe that banks will definitely be something worth looking at. Okay, then other than that, I see another questions. It says that with the impending second wave of the pandemic, do you foresee a market slump to the level in March? Okay, my own personal view, okay, I believe that we may not see those price level again. Okay, why? Is because currently Feds have come out with their stance that they will do whatever it takes, okay, to support the economy and the market. Okay, and also we are looking at all the fiscal policies in place. Okay, and also additionally, we will not be seeing a huge full nationwide lockdown. Okay, I believe that that will be too costly, okay, too costly economically. So I don't believe that we can afford to take another trillions of dollars in terms of costs, just to lock down the full economy to curb this virus. Okay, so with all those in place, okay, I believe that economy will start to reopen. Okay, but what the resurgence in case affect will be the pace in terms of the pace at which it reopen. Okay, so with all these factors in place, personally, I do not foresee that we will actually reach the level that we see in March again. Yeah. Okay, there's another question on a vaccine company. Which are the US vaccine company? Of course, the more popular one that everyone heard of is Moderna. Okay, because the technology that they actually use to develop this vaccine is kind of different from the rest. Okay, it's actually one first of its kind. So I believe that if they are able to succeed, okay, in terms of using this technology for their vaccine, it will actually unlock more room for this kind of technology moving forward. So definitely it's a positive development in terms of the whole healthcare industry. Okay, so Moderna is one. Okay, but of course, if you were to ask about the vaccine going to the regulatory approval stage, currently there is none. Okay, we do have one Chinese vaccine approved by China, but it's only approved, I think, for their own military usage. So if you are talking about a general widespread a general usage of mass production of in terms of this vaccine, right? There's actually a none that is fully approved at the moment. Yes. Okay, let me see what other questions there are. Okay, there's one. Yes, I did present slides on the historical average performance of the US market. Okay, so there's this question that says, why traditionally August and September is a slow market for US? Okay, you have to understand that the chart that I presented, okay, it's not a guarantee kind of thing. So that is actually tabulated, based on a historical past performance. Okay, so there are a few explanations for it, but there's also no concrete evidence that those explanations will work. Like for example, one will say that people may start to lock in their profits or to liquidate some of their holdings for cash. Okay, in the summer period, kind of thing. Yeah, but all in all, definitely there are still month of August and September which still deliver a positive return. Okay, but generally from what we see from the historical performance, yes, August and September may be a slower market before they actually starts to pick up towards the end of the year. Okay, see. Okay, there's a question on how to check the net flow. Okay, yes, I did mention on the net inflow and net outflow of certain ETF. There's actually a website that you can actually do it. Let me see whether I'm able to. Yeah, actually there's a website that's ETF. Yeah, it's actually ETF.com. So they actually you are able to search for the ETFs that you want to find, and they'll actually show you. You can actually plot the time period, and they can actually show you the net inflow of or net outflow during that whole period, kind of thing. Okay, if you have any counters which you will want Ming to do some TA, do feel free to post in the chat. While in the meantime, I go through some of the questions which you all may have.
Okay, Ken. So I think I will share with you on the TA very shortly. While Rong will continue to review the questions before he answers a few more before and we end off the night session. Okay, so I think there is a lot of questions on silver. Okay, just like I mentioned on gold, but we didn't talk about silver, right? Okay, so right now, let me just show you the chart on silver. And also oil and gas, so just these two, okay? I will just use ETFs to share with you more. Okay, so you guys can see the chart right now, right? So this is silver, SLV. The ETF is SLV. Okay, so for investors who are looking to trade this and who are thinking whether it is too high to enter silver, if you look at gold and silver, the price movement actually by right they should move in tandem, but not so much in terms of how they move, even though theoretically speaking they should move together because they are both precious metals. Okay, but if you see silver, it has been it has been having a sideways. It has been on a sideways trend for the past 4 to 5 years. Over here, you can see not doing much. In fact, if you look at moving average, while I was sharing with you, the high was 48.35 back in 2011. And if you think that this is too high, then maybe we can look at it in a very different perspective. And this may just be a start of something very good, a very strong bull run. Okay, but you also need to know that silver is has always been the more volatile volatile of the both. Okay, gold is much more stable in that sense. Okay, silver is a lot more volatile. You can see the price in I think this is also back in mid-March there during the crash. Okay, where silver dropped to 10, and right now it's 22 already, doubled in more than a couple of months. Yeah. Okay, so if you look closer, let's zoom in. Okay, crisscross, the trend is not indecisive, but right now you can see both of it is actually crossing up. The moving average is crossing up. So when it crosses up, what are we seeing? It should be an uptrend. Okay. But I mean, I'm not saying that these cannot come back down immediately. There is still a possibility, definitely. But if you do not want to catch, and if you're uncomfortable with catching this type of movement, right, you can always wait for it to come back to the moving average before going in. Okay. And so the 20-day moving average would be a good indication, or rather a good place where you can look for enter. And fundamentally wise, if you think of gold and silver as both precious metal and commodities to invest in. Okay, they should have the good correlation to continue upwards. Okay, the trend should continue upwards. Okay, you can see gold has been on an uptrend for a very long time. Okay, so right now, this I believe it may still be just a starting. If you ask me to draw any kind of trend line, there's not much, because here is too strong a movement. So if you are afraid, I think a good pullback to the 20-day moving will be a good entry point. But if not, you can do averaging for the near term. Okay, that means buy when you're comfortable and hold it for a longer term. Okay, so that is for silver. The next one that I'll share with you is the oil and gas ETF. This is the select ETF. Let me see. Energy select spider ETF. Okay. So in terms of oil and gas, I think the trend is down. Okay, you can see. Okay, so just now I was mainly telling you about uptrend, but look at this. The moving average right here, you can see the 50-day. Rather, I think this is the 50-day. Let me just confirm that. Yeah, so 20, 50, and 200. So the 50-day moving average, sorry, this is weekly. Let me just go back to daily chart. It has been clearly on a downtrend, okay, for the past 3 to 5 years. Okay, yeah, can see. So just now on a weekly chart, it shows very good. So you can see now 200-day moving average acts as a very good resistance. You can see here, here, and here. And then the 50-day, okay, for this, probably the 200-day moving average will act as a better resistance. Okay. And looking at it, I still don't see prices trading above the 200-day moving average. So I don't see a reversal in the trend in the near term. Okay. Even though there is quite a big movement here, but this is nothing as compared to this downtrend here. Okay. There is still bearish sentiment, and with the continuation of what is going on around the world with the COVID still happening, more cases happening, oil and gas is still going to be heavily impacted. Okay, so as what we can see here in the chart as well. Okay, so that is for these two ETF. For that, let me just see if there are any more. Probably I'll just take one equity counter since I've all been doing ETF. Let me see. Oil I have covered. Let me just take a look. Oil and gas, this energy sector. Okay. We will not be covering on local stocks. So we will mainly be aiming to do US counters here. You can see that I'm covering on US ETFs at the moment. Okay, so let me see. Okay, I think I will do Facebook. Okay, we have a question on Facebook. Facebook and Tesla, these two, and then I'll give it to Rong, and we will end off tonight's session. Okay, Facebook, you can see, like I say, I've always just been mentioning on one indicator, which is the exponential moving average. Okay, cross down, downtrend, cross back up, everything is back up. It has been on an uptrend. Okay, it is a tech company. Okay, so it is likely going to be, it's likely not going to be as badly affected by the COVID situation. Okay, so 50-day moving average is looking like a very good support over here. Okay, you can see that. But you need to know that I think they are going to release results. I think it's this week. I think it's end of today. Or sometime this week. I cannot remember. Yeah. So we can expect volatility to take place. Okay. So I can go either way. You can break below this 50-day moving average and hits to the 200-day moving average. You can see 200-day moving average has always been acting as a good long-term base support. You can see that here. You see, once it gaps up, continues to act as a support for at least the whole of last year. Okay, before this huge movement down and very fast recovery up. Okay, if you want to draw a trend line, you can also connect these two over here. Yeah. So sorry, let me see if it extends. Yeah, I should draw this. So if you can draw the whole thing to see. This one is very long term. Okay, if you want the prices to come back down to this kind of level, you probably will have to wait. This one is back in 2019, and this is in just few months back. Yeah. So I would say probably just look at the 20-day, 50-day moving average to look out for potential entry. Okay, and then for near term, resistance will be the near term high over here, 250. So from the current price, maybe about $20 US away target. But like I said, this probably fundamentally, if you look at it, it is very attractive as well. Okay, maybe a company that you may look into holding in for a longer period of time. But anything at the 200-day moving average may present a better opportunity as well. So do look out for volatility that may happen for that. Okay, the last one I will do is Tesla. Okay, Tesla is, of course, the price movement has been quite huge in terms of movement. Let me see. So if you have followed what I shared with you back in, when is this? April, right? I was saying, I think March or April region. I can't really remember. So I was saying, I drew a line here. Very classic resistance turn support. Okay, because the price movement here is actually quite huge, but let me see. Yeah, so the price over here is not it's sort of sideways, but it's actually a huge few $100 movement. Give me a moment. Oh, sorry, I got signed out from the platform. Rong, can you take over the Q&A for the moment?
Yeah, sure. So I actually see one question asking about how long do you think the government stimulus will last, and will the market turn down when the stimulus stops? Okay, so for the upcoming government stimulus, okay, we actually see that they actually plan it out over the next few months. They even extend some of the lending program until the end of the year. So this is created in order probably to provide ample time, okay, for them to keep the resurgence of these COVID cases under control. While as long as it's under control, okay, then economy can actually start to reopen, and there will be in a lesser need, okay, in terms of a continued government stimulus kind of thing. Okay, so definitely when stimulus stops, right, we'll be seeing, it could be an indication that if they are not providing stimulus, it could be an indication that things are under control. Okay, the market can actually progress naturally on its own. Okay, so I won't think that the market will just turn down like this just because stimulus stop. Okay, a more impending risk that I see that may cause the market to turn down will definitely be in terms of the tension, okay, between the US and China. Like just now we see that there's a huge a lot of areas of tension that is starting to build up. And when the economy start to reopen, they will actually have more capacity, more, in a way, more ammunition for them to create more tension in that sense. So that will definitely be a huge major risk for the market going forward. Okay. Then probably one more question I see that someone's asking about in terms of a US election. Okay, in terms of how it will affect the market. Okay, I think that's a very good question. Okay, because one of the key watch point, as we approach the end of the year, will definitely be the election outcome. Okay, because if we were to actually see, for now we see that Democrat is being the more, Biden is being the more popular one. Okay, but it could be still be too early to say. Okay, but if we were to have, a Democrat control of the White House, Senate, and also the House of Representative, right? Okay, it will actually make a corporate tax hike more likely. Okay, because Biden actually, he said that he has plans to actually raise the corporate tax rate from the current 21% to 28%. So this will definitely be detrimental for corporate firms. Okay, because with higher corporate tax rate, it will definitely weigh on your corporate profitability and also restrict some of your dividends. Yeah, so definitely we may see a correction if the outcome of the election is towards the Democrats. Mm. Okay.
Okay, I think the time has almost come to the end. So I will just end off with the Tesla chart before we end off tonight's session. Okay, we thank you so much for all the questions that we have, and we apologize for those questions that we cannot take. Okay, do feel free to help us with the post-webinar feedback form if you want to have a copy of today's webinar slides. Okay, and so let me just quickly run through on Tesla. Okay, so back in a couple of months ago, I presented on Tesla also. I was saying that this was a very good resistance turn support, level 380 region. Okay, so Tesla had a huge movement back in January and February. Okay, hit about 900 plus, okay, before coming back down to this level. Okay, this company, there is almost no, I mean, we cannot use traditional valuation means to value this company. If not, it doesn't really doesn't really make sense to have that kind of valuations for a car maker company. Okay, if you deem them as a car maker company. Okay, but if you deem it as a tech company with a lot of potential, yes, this is actually still one of the company that you can look into investing, probably in a more longer term period. Okay, if you look at the moving average, you can see, like I say, 20-day. Remember the 20-day moving average. Let's see the 20-day moving average. Just a shot. Okay, just look at this. How many times has it hugged this 20-day moving average? Okay, back then, even though the huge movement down, the 200-day also acted as a form of support, even though not over here, okay, but generally there was a resistance and support over here. So that was probably a good point that we can look into as well. But right now it's over here already. So again, you can see the 20-day moving average is still holding on, even as of now. Okay, so for potential entry, yes, you may consider having a 20-day moving average as a base of your entry. Okay, so this is 20-day, but because this counter may be erratic and also very volatile at times. Okay, the prices can move in the range of 100, 200 US dollars in one single trading day. Okay, so it is still very possible for you to come back and touch this level, the 50-day moving average, which investors should look out for as well. Okay, and so that would be all for Tesla. If you're asking me how much to target, honestly, I will not be able to give you a figure here, but if you want to do the Fibonacci retracement to give you a figure based on this recent high and this recent low, let's take a look if we can find anything over here. Okay, if this uptrend continues, let me see. The 161.8% will be $2,600 dollars level. Okay, this is based on technicals, but you can see for the Fibonacci, 61.8% will coincide with the 50-day moving average. So that is a value that we can look out for a potential entry on this as well. Okay, so either the 20-day or 50-day for the near term, then probably the 200-day for a longer term perspective. Okay, So that would be all that I would like to share for today. So if you have any more further questions, do feel free to post it to your trading rep, okay, if you can reach them. Okay, if not, you please help us to fill up the feedback form as well. If you want a copy of this today's webinar slides. And once again, we apologize that we cannot take all the questions today. We try our best to accommodate to everyone. And yeah, that will be all. And thank you so much for attending tonight's webinar. Okay, so let me see here. So do leave your email address under the overall feedback column because yeah, the feedback form I don't think has a place for you to fill in other than that. Okay, so QR code is over here. Okay, the team global markets desk, it's over this. Okay, we have, this is the team that is serving the night desk. Okay, the US and the Canada. Okay, so if you have anything related to execution, you can contact us. Okay, and we have completed the Q&A. And thank you once again for joining us. We hope to see you again next week.